Welcome everyone, lots to get through tonight, so thanks for coming at the new time, 6 o'clock, and just, it's better for, I don't know about you, but it's better for the weekend I think, just to make more of the Sunday evening. Anyway, lots to get through. So US earnings season is about to kick off, so we'll talk about why that's important. Even if you're trading UK stocks, that still matters. US stimulus is still allegedly getting closer and closer. And we're going to talk about the US election, Brexit, and options expiry. Now, some of these things you might think, well, if you're only trading UK stocks, why does that matter? Because I think we need to assess the general mood of the global markets, and where the US leads, the rest of us follow. So I've always taken a massive interest and complete focus on what the US is doing, and then reflected on what UK and Europe is doing. Okay, so let's get going. What I've got here is the NASDAQ daily chart. So the format for this evening, for those of you who just joined us for the first time, is I'm going to be just whizzing through some indices and market internals for about 15 minutes, and then I'm going to look at the pound. I'm not going to skip through a lot of forex, just look at the pound, gold and oil, and then we're going to go straight into UK stocks. UK stocks is by far the most popular subject in these sessions, so that's what I'm going to focus on. If the phone goes, I may need to nip off for about 60 seconds. So I apologise in advance if the phone goes and I need to pick it up, but I just need to pick up an urgent family call if that comes in. It may not come in, but we'll see. Right, okay, so like I said, where the NASDAQ leads, the rest of us follow. So let's just grab my pen so I can start to map this out. By all means, punch in any questions, and if you want to turn your mic on later on, that's fine. So you can see we've had a 1, 2, 3 wave correction, and since that correction, back end of September, we had done a 1, 2, 3 wave push higher, and we have closed. The most significant thing about Friday is the way in which we closed above this area. So the bulls are still firmly in control. It's Columbus Day tomorrow, so anybody who does have anything to do with the US market, if you don't already know that, then Columbus Day is on us tomorrow. So it's a short week for the US, and in terms of data, the main draw for me, even across European and US data, is US retail sales on Friday. Why? Because there's not much else data coming in during the week anyway. We've got Aussie jobs and UK jobs. UK jobs are Tuesday. It's got very little, apart from the fact that the US and Canada are away on Monday on Columbus Day, we've got very little data anyway. So I suspect the markets, Europe and UK, is going to be a little bit indecisive. Excuse me, indecisive on Monday, and then we'll start to see where the markets may or may not go on Tuesday. So quick look around. Let's look at Ftse next. And some of the Ftse stocks have been doing incredibly well. There's been a lot of money coming into some of the Ftse stocks, and stocks that I wouldn't have expected. I was looking at two stocks stand out for me on the UK. It's Dunelm and B&M. Now I think these are really not very strong brands, but the stock prices have been steaming ahead. Leaves me a little bit confused as to why. Hey, but I mean, perfect pricing. If the market thinks they're worth what they are currently trading at, then the market must be right. Perfect pricing. What do I mean by perfect pricing? What I mean by perfect pricing is that you have to trust the charts. You have to trade what you see, because all the noise that's out there about COVID, about the economy, etc., it's all going to be priced in. So if it's priced in, perfect pricing, we need to stick to what we see. So at the moment, the Ftse looks on target to come into 6100. Now I know we've got Boris Johnson making an announcement tomorrow, but we certainly saw a very flat, hesitant, who knows, potentially even a reversal bar on Friday on the Ftse. So I keep flicking this chart around trying to get the best scale on there, and it's not. It's a good package, but it's not perfect. So if at any stage in the coming day or two we close under 59.30, be warned, this Ftse could roll over. We're under a trend line, we're not above it. So if this is a bearish consolidation, any lower close or any higher move with a subsequent lower close could come off. If at some stage we close above this 6,100, then expect to go back to 6.4 and possibly even higher. So we're in a little bit, we're close to the sort of apex of this trend line, or this, the underside of that trend line. Quite often, if this is a bearish consolidation, bearish consolidations tend to be over with a high and subsequent close lower. That's just the way the markets tend to work. So all the time, we're above the 50-day average, tick. We're above this key line of support, tick. But we're not above this trend line, cross. Okay, so the odds in the favour of further bullish moves are 2 ticks to 1. That's my sort of view on the Ftse at the moment. If I now look at, let's just take a look. I tell you what, let's kind of look at the 2020 range. So 50% will be 62.45. You can see that this zone, this is the zone underneath us, which is at the moment holding. So we dipped into this zone and kept coming out. So these moves down here in September are very bullish. However, any move back into that 58.88 and expect to see 54.75 pretty quick. Right, Nasdaq, DAX. DAX again very hesitant on Friday. We've got a huge amount of resistance up here at 13,170. This we've not filled the gap yet. All the US indices have long since filled the gaps from the COVID demand slump. This has technically that move on the 3rd of September has just, you could argue that 3rd of September high and subsequent drop lower was a gap fill. The reason why I talk about gaps so much, if you are day trading, gaps are the sort of the main nutrients of a market, if you like. But in longer term investing, you need to know how the market is reacting to these gaps as well, because markets don't like gaps. So this is probably technically just about fill. Maybe if I really scrutinize it, maybe I can see that it's not quite hit. No, I think it's marginally not hit, but we're talking about a matter of a few pips, not much. So again, so if you are a European and or Nasdaq trader, this is sitting up above the 50-day average, major resistance just above. So at the moment, any pullbacks to 950, 900, 950 are buyable, unless of course we close underneath that. Right, let's look at the Dow. We'll just back to the American indices. Let's look at the Dow. And the Dow the US just had a great close on Friday. And the reason why I've pinpointed this price, that's the 2019 highs. So we didn't close above the 2019 highs on Friday, so there was not enough momentum to punch that through. Okay, so at the moment all these markets are holding up, just as we go into the US earnings season. So okay, we'll come back to that in a minute. Let's just now flick across to the pound. So the pound had I've been shorting this pound. At any markets under the 50-day average, I will short. As far as I'm concerned, that's anything under there is the short zone. Anything above there is potentially the long zone. So on Friday, we were able to punch through that, and so at the moment I can't short that unless that closes back under there, back under that 130. I can't short now unless we run up and then get a reversal signal. So at the moment I have to, if I want to short that, I have to back off because it's counter trend trading. So at the moment the pullback is 129.88, and we could make our way all the way back to those highs. Okay, so but any close under obviously the big 130, we only closed 45 pips above it. So any close back under 130 and I can start shorting again. Quick look at the euro. And same thing, same pattern. So all these, at the moment, these pullbacks to 116 been bought with just 118.30. So it's taken a long time to get up there. And last but not least, euro yen. It's continuing to climb higher, but it's got lacking momentum. Doesn't look at the moment. It's a narrow range. The euro US and pound US did a big move. That did not do a big move on Friday. Excuse me. Okay, right. Gold and oil, and then we'll move on to stocks. Gold, right into that resistance area. I do regret not buying these dips. Well, certainly not buying this midweek low at 1871. But hey, I can't. I miss trades. That's trading. I miss trades. You miss trades. We all miss trades. We can't expect to get every move, every trade. So we're tucked right into that August resistance. So and it's a little bit like the Ftse. We've got this trend line just above us. So if we knock into that trend line and roll over, then I talked about 1800 as this started coming off in early August. Ever since we've been doing these Sundays in early August, I've been talking about 1800 for the gold, and I still don't think that this has put in a good reversal yet. I still think we could come in lower and possibly find 1800, but that's an impressive move off of this August 12 low. So I can't fight it. Again, we've only I wouldn't start, personally, I would not start buying gold. If we pull back to 1912 and close above 1930, that's different. That's the most likely scenario at the moment. We've got a huge amount of resistance just above us. Now we've got support down here. So if you're a gold bull, if you're a gold bull, you should have been buying down here at 1850. But like I said, if 1900, 1910 we hold close higher, then that could start to wind its way back up. Oil, let's look at silver first. Silver, same pattern, not recovered in anywhere near the same as gold has, which makes me suspicious. of gold. I'm backing off. The commodities I like, and I've been talking about, anybody who's been joining these sessions for a while will know that I like the grains. So the wheat has got 617. That got up there a little faster than I thought. 600, but it's obviously a major resistance. I think we'll come back to 570, 570, 575. I'd be a buyer of that at that stage, and I think we might be able to see 624 and 650 plus. And beans before we move on to stocks. Lovely, lovely chart pattern down there. Lovely reversal pattern, and we're slammed right into, we're breaking resistance levels even now, which makes me think the wheat has got a lot more to offer as well. And it's all down to this. Well, one of the reasons why we're seeing such strong commodities, both the softs and the metals, is this dollar's rolling over, and at the moment that doesn't look as if that's going to stop. We're right on the line there, on that little trend line, but at the moment that looks lower, and the main support is all the way down there at 91.70. Pop back above here, and that potentially spells trouble for indices as well as commodities, and of course pound and euro. So, but that's a significant weak bearish close down there. So at the moment the indices and the commodities, I would suggest, are safe. This is, the phrase that is relevant to today is we have been, ever since the reversal in March in the markets, we are in a low growth, low risk environment. What does that mean? To me and to you, it means that because of zero interest rates or even negative interest rates in some situations, the dips are buyable because of this cash that is sloshing around, and the central banks can continue to print. And that's why that's one of the reasons, well, the main reason why you are seeing so many stocks absolutely fly. And you've got obviously this is right move, a lot of activity in the house price market, in the housing market. Stamp duty, as you probably already know, that initiative, that stimulus for stamp duty is going to be taken away. I think it's the end of this month, I think. So this is a possible reverse. I wouldn't, if I'm going to short something, I wouldn't short one of the top brands in the market. I would find it goes right through to March, does it? Right, okay. Anyway, house price inflation is not that great. It's tailing off a bit recently. Hardly surprising given the level of unemployment and uncertainty in the market at the moment. Anyway, let's move on. Right, let's do a quick retake on our favourites, or certainly my favourites. BT, hesitant on Friday. If the market dips tomorrow, I would be buying more in BT. I would be perfectly happy to try and buy more at 102, £1 or 102 on BT. Very happy indeed. Keep my stop out of trouble, but I still think that we've crashed into a lot of resistance. This one's really struggling to get any momentum to the upside, but it's a long-term view for me. And BP, we talked about BP a lot. Oil has punched higher. Let's see what it's holding its own, but it's fragile. really quite fragile. I think we'll see 213 again, 210, 213 again. If we subsequently hold, then that could push higher. I mean, it's not, to me, that is not a reversal pattern. It's a bit of a dead cat bounce. It's potentially a bit of a dead cat bounce and not a reversal pattern. Full-blown reversal pattern for me means if you come down to a new low, you've got to close above it the next day. And we did, but it was a pretty feeble reversal. This is obviously better. You've got bigger bars here. I think what I'm seeing is just a lack of momentum, a lack of participation, participants coming into that. But nonetheless, it is trying to make headway. Now, Rolls-Royce, talked about Rolls-Royce a lot, and that's had a fantastic week. That looked dead in the water on Friday the 2nd. So from a low of, wow, we've doubled. We've more than doubled. That's what I call a reversal. I know they had a rights issue, etc. But that's a phenomenal. I was very keen on this stock. When we did this big spike up in June, I was buying pullbacks and then backed off when it rolled over. But that's got to fall back. I'd like to think that will come back to 150, but I'll put an alarm on there for 150. Anybody in that by any chance? And that's a full-blown reversal there. That is what, if you ever see this pattern, new low, a significant close above the next day. So there's your signal, and that's what we're not getting in beep. We're getting higher closes and new lows, higher closes, but we're not getting significant higher closes. Really, good momentum higher closes. Same happened here. Same happened here. It's got a habit of, this is good. I think we're going to see this a lot more often. Big move up from, what's this, about 230 to close to 400, and it falls right away. Decent move up from 212 to about 280, falls away. So I would not chase that market. And so I think that's a big issue. I think we might see that pattern down here. So I think we could easily see some of these lower numbers. Well, I say easily, I would expect to see lower numbers. This is a daily chart. You're looking at a daily chart. So I do not chase markets. That's a clear point, a clear rule of mine. And I would expect to see some lower numbers on that one. But I will be a buyer at 150, and I've put an alert at 147. Right, quick look at Legal and General, and then we'll look at your stocks. Legal and General, it's had a nice move up into 200. You can see the way I was ranging it when we moved up here on the 28th. I think that's a buy at 190, and then my next target would be 213. Let's have a look at. So I'm flicking, sort of flying around a bit here, but here's EasyJet, and it's a little bit like Rolls and BP, isn't it? It could so easily, see how this just rolls over. Every high just gets hit. Now with a big high here and a bigger rollover. So the bigger the high, the more it rolls over. So this is going to be in serious trouble if it comes under 468. However, if we close above this 50-day average on this daily chart, then we could get a run. But I'm not buying airline stocks. I'm just not buying airline stocks. They don't. I've got some very specific sectors I like, and this is not one of them. Banks now in the US. Let's pick up on what I talked about earlier. In the US, it's the banks that report very early in the season. So we got Bank of America, Citigroup in the US coming results. Must be this coming week. I'll check the exact dates. So here we've got Lloyd's coming up at 23.5. It's been above 28. Well, it's above 28 now. You know what? I would like this at 25. Sorry. If we see 25, I'm going to set alarm for 25.40. I will be interested in Lloyd's. Let's have a look at Barclays. Barclays has been on a bit of a run. I can see that coming back into 100, maybe lower at 98. It's a cleanish chart, not too many gaps in there. So I would, if we see 95, 97, I'd buy. Right, let's have a look at some of the. Let's shout out some of the stocks you're interested in. I'm gonna ITV. Yeah, that's one I keep a check on as well. Right, let's go to ITV. Good run. I would expect to see that at 71 in the next. I'd be surprised if that does not retest 71 in the next few days. I mean that's come from 58, so that's due a pullback. This is an interesting chart because if that is let's have a look. 1, 2. Yeah, we've had a 5-way run here. So you've got a 1, 2, 3, 4, 5, and 5 was more impulsive than initial moves. That wave was higher than that wave. So looks good, but I wouldn't chase it because we're coming into a lot of resistance here. If it's going to buy that, I'd attempt to see if we can get back to 70. Right, let's quickly go through some of these others. Polymetal. An expensive stock, but nonetheless moving well. So the last time this ran, we went up to 21. There's a major sort of issue here at 1750. We're only 1708. I'm assuming that we're going to see a sort of slow start to the week. If we get a slow start, then 1666 is a buy on that major support line. You've got to have a stop under 1620 at least, and then see if we've got a gap fill at 1880. But be very careful with this one. If that closes back under 1630, be careful because you could come back to 1535 pretty quick. The reason why I say that is because there's a lot of red on the charts. So I'd be wary of that one. Sainsbury's, yeah, good one. Been talking about Sainsbury's last week anyway. Good week. So we've got a gap here at 191. I would want to see if that can hold that 190. It's trend line resistance. There's a gap. I think there's a reasonable chance, unless that picks up and keeps closing high. If you're in it, I would just sit tight, manage your risk, and wait to see if we can close above the £2 mark. If it doesn't, we could so easily come and see that 190. In fact, I would set an alarm for 190. Ocado still coming off. I talked about shorted this into 25.58 and backed off. That is now arrived at major support. Why did I short it? Because it had a reversal pattern and a sell signal up there. So if you're interested, it's a potential head and shoulders pattern short on the short side to me. Shoulder, head. If we get a push into that 2600 and fail, this could wind its way back down again. However, this is major support. If this dips down here and subsequently closes above 23.72, that could be a bullish signal that this is ready to climb back up again. So we've been on an incredible run. This is almost tripled, isn't it? March lows under the 1050 mark, and we've seen recent highs nearly up there on the £30 mark. So this is nearly tripled. So hardly surprising that we've seen some profit taking up there. Hardly surprising. Right, let's look at Safe Style. Right, it's a fairly tidy stock, some gapping. Did a tremendous run up to 58. I can see why you're interested in this. Yeah, this is a really key line. What do they do, Andy? What do they get up to? So in January this year, we're at 77. Double glazing. Okay. So if there's a lot of activity in the housing market and people are moving into new houses wanting new windows, okay. Yeah, I'm going to keep an eye on this one, SFE. There's a lot of red on this chart. So are you actually in it? Government support better energy, okay. So we pushed off here on the 25th, went on a move into resistance at 30th. You are in it, okay. Do you mind telling me what price you got in? I think if we see 28, 29.90, okay, good. Oh, have you just gone in on Friday then? Okay. Well, I can see why you're in it. So as long as we don't get under 25, yeah, I'm definitely interested in that. Definitely. Just a bit concerned that we've got still so much red on the chart. But thanks for bringing that one into the group, because that's interesting. Right, let's look at National Grid. Let me update my charts on this because I've got a lot of noise on here. I have to say that's potentially a sell signal there on Friday. New high, immediately close underneath. And when we did this on July, we ended up coming all the way down to 830. I mean, if you're in it and you picked up a good price on the way up here on one of these levels, great, manage to stop. If you're not in it and considering getting in it, I would wait for at least £9. I would wait for the 900 mark. At which point, let's see. Hi, somebody coming on? Hi, somebody turn the mic on. Right. Right. I will be very. Yeah. It's had a good move. I mean, I could be wrong. But the bullish argument is if we hold 935, we may dip lower. If we can hold 935 the Monday, Tuesday of this coming week, then we could potentially get back up to 970 plus. But it certainly showed some profit taking and some weakness at this stage. Right, let's look at British land. I haven't looked at British land for a long time. Whoops. So we had this really nice spike higher in June. Then we drifted into September, drifted lower in September, and then popped higher. I would have thought you might see 350 again. I would have thought you'd highly likely to see 367 again. If that holds, then I think we could start to make our way higher. So I think in the next day or two we might see 367, but longer term I think we can wind up to 428. What do you guys think? Right. ELND. Yeah. It looks as if it's. Let's put volume on here a second. that's a decent building of volume here. So I think there's been a lot of institutional, looks to me as if it's got a lot of institutional backing. So I think that bodes well for future price growth. So any others? What else are you guys looking at? INF. Nice clean stock. Thanks for these, Andy. These are very interesting. I would buy a dip into this. I would, if I got the chance to buy 395, I would take it up. I think we'll see 470 fairly soon. Did see a lot of selling on a couple of days last week. It's looking good. So back in June we saw 505 roughly, and here we are back down at 420. Pre-COVID we were up at 8. Wow. Yeah, I'm definitely gonna, if I get the opportunity to buy a dip in that one, I will do so. NWG. Hi Ken. Yeah, we're doing 6 p.m. BST at the moment. From now on, NWG. Where's NWG? NatWest. Oh, right. Okay. So that's not the right ticker for NatWest, is it? Yeah, we looked at Lloyd's and Barclays. Short term lower. I would have thought we might see 107. So it's been on a nice run from 90 to 113. Yeah, I will send you the recording. Yeah. Yeah, I think that's to me that's viable at 105, 106. If you're in it, stay put. Hang on a second. Nearly forgot to put my mic back on. If you're in it, stay put. If you're looking to get in it, hold out for 105. Okay, let's look at Standard. Let's continue the bank theme for short term. So Standard went as low as 335. So we've hit obviously the 50-day average. I mean, any pullbacks to 350 are potentially good in Stan. Let me just go through my list. Yeah, look at the. Let's just go back over Dunelm. I mean, why? It's such a boring store. Why is this Dunelm and like the boring B&M doing so well? I mean, to me, that's a bear raider candidate. It's because if that closes, under that 15. That to me is look at the volume. We're coming up on lower volume. I'm going to short this. DNLN. We've gone up on lower volume. And we've already had a couple of heavy selling days on the 10th. I don't think that price is sustainable. I don't think Dunelm is going to stay up there. Make it. Yeah, you're coming up with some good ones. I agree. Yeah, I would if that. Well, what would you say, Andy? 290. If we aim to try and pick up a bid at 290. What have you got a pullback in mind, or are you just keeping an eye on it until it dips? Yeah. Yeah, so it's come up from 240 to 315. Nice. And not that long ago. We're down there late September. Very good. Right, I'm going to go through, see if there's some stocks I really want to look at. Yeah, okay. Right, good point. Yeah, markets are open, but with Columbus Day, could be slow. Wow, that's a tough question, isn't it? Let's go back to INF. On balance, I would probably say INF. Not much to choose between them. In terms of the actual charts, I'm not talking about, I haven't looked at fundamentals, but in terms of the actual charts, not a lot to choose between them. Right, keep them coming while I just have a quick look through some lists I've got here. AA isn't a bad way, isn't it? A car's so reliable, people don't join the AA anymore. Let's look at that B&M again. Yeah, these are the markings I had on for B and M the other day, and that is to me really struggling. Okay, I'll come to Melrose in a second. I'm interested. House builders seem to be lagging to me. It's Beasley. I was looking at Galliford. Is this Countrywide? Yeah, Countrywide. So I'm just scanning Ftse 250s. JD Sports. Was it you, Andy, that's talking? It was you, Andy, that's talking about JD Sports, wasn't it? It's. I find that really hard to believe that's going to stay up there. Hi, Rash. I think it's Rash that's just joined. We are an hour into this, Rash. I've changed the time to 6. From now on, it's always going to be 6. I have done a really good recording of this, so you won't miss out. I still say that's coming to 734, unless that's got to keep closing above 7. If we can stay above this 780, then I could be I'll be wrong, potentially wrong. I think that's due a pullback. Yeah, I'm not convinced that's going to get above that 8 quid, but I could so be wrong. Right, let's look at, you asked me to look at Melrose. Yeah, it's taken. These recoveries in some of these stocks have taken a long time, haven't they? Well, they're not recovered. Yeah, 244, and we're still at only 132. You in this? It looks as if it's capable of keep going higher on when the markets were a bit jittery, or Europe was a bit jittery on Friday, and this held up. So it's got relative strength. The fact that it held up on Friday. There's a gap down there at 117. If we get into a bumpy period and that dips to 117, I would risk an entry at 117 on that MRO. Right. Look at these. Some of the. I think it's a bit concerning that some of the property-related stocks, anything to do with the property market, seems to have potentially topped out. That right move to me is a crucial level. Kier Group. It had a good couple of days in middle of September. It was right up there at 65, and here I suppose it's not come down a huge amount, isn't it? Would I buy that? I would keep an eye on it, but I'm not. It doesn't really ring my bell. I'm not about to really hold out for that one. Hammerson. Wow. So I'm pausing my machine. There's right. Look at that. What's happened here with that? That's really weird. That's very. Andy, you in on this? What's happened to Hammerson? Why would something jump from 50 to 300 and then come all the way back to 20? That's. I don't think I've ever seen a HMSO. Okay. Wow, that's rights issue. Okay. So the market, I still don't understand. Why would it leap up and then fall out of the sky just because of a rights issue? Dilution of stock. Oh, that must have been a hell of a rights issue then. That doesn't make, technically that doesn't make sense. Okay, well I'll walk away because I obviously need to look into that. If what I'm not going to trade it, so I'm not going to look into it. Right. Yeah, that's good relative strength. Inch Cape. I'd consider Inch Cape on a pullback. So look at Halfords. Don't like Halfords. Keeps leaping up and then drifting. Not for me. Right, let me have a last dig around. What do I want to look at? Tallow oil? No, I do not want to look at tallow oil. Talk subject to a takeover bid, isn't it? I can't touch that now anyway. That's subject to takeover. Stagecoach. Ooh, yuck. I know the other one. Let's look at this one. This has gone nuts. Look at this GFS, G4S. From 67 to 214. Wow. It's gone really nuts, hasn't it? Look at the way it clung to that 50-day average. Every time it traded around the 50-day average, it spiked higher. These are the kinds of stocks you want to. Oh, takeover talk, right? Okay, yeah, you could be right. I only sort of scanned the story. I scanned the headline, didn't scan the story. So, COVID drop off. But I tell you what, once we get past this level here, so there's a lot of mess and jiggering around. Once we get past, once we get through June, this chart becomes so much cleaner. It just shows you how important clean charts are. So after we come up here, we consolidate, and the consolidation is over once we dip. Now people, yeah, a lot of inexperienced people don't understand that, but and it takes, and once it comes into a key sort of support area, key pivot, then it goes on its run. But so it's worth looking at that, because this is obviously a lot of horrible selling, and yeah, we can't hold the 50-day average, we drop, go nowhere, and then we just suddenly start to see a much cleaner chart and a much cleaner pattern emerging. Right, okay. 145. Okay. So if you followed that story, that would be great place to get in. Right, I've not got any other stocks at this stage to look at, so we've done over an hour. So let's leave it there. Unless there's anything else you particularly want me to look at. Sorry, Alan, I think I might have kept you in the waiting room. Yeah, I'm not used to. For those of you who just joined us, I've kicked this off at 6 o'clock from now on. I was hoping everybody would pick up on that. Sent emails out and new Zoom links out. I've done a recording, so I'm going to make sure that everyone in the room gets a copy of gets the recording. But do please make a note to come in at 6 o'clock next week, because we had a good session again, and we've gone through some really interesting stocks. Thank you very much, Andy, for your suggestions, because a couple of those I really like. So we've done okay. So just to sum up, it's a US holiday tomorrow, although the markets are open. Obviously, we've got a lot to get through this week, but the key point, we've got options expiring on Friday, so markets tend to be a little jittery in the run up to options, and they're not jittery. They tend to be a little bit sharper in the run up to options expiry. Okay, so look, we've covered a lot of ground. Overall, despite a lot of negativity in the press, the UK press definitely, UK press seems to be really doom and gloomy. But if you look at these charts at the moment, the Ftse is holding up. The UK stocks, there's a lot of very nice stocks that have already been on some runs and are pulling back, ready for potential further higher numbers. So, and typically this is the best season for buying stocks. Late January to May and August, September into October and through to November, heading towards Christmas, is normally a good cyclical period to buy stocks, and that's proven to be the case at the moment. So turn the news off, open up your charts, and I'm looking for pullbacks in these markets we just talked about. Right, no more questions coming in, so I'm going to thank you again for your company. Make sure you're here at 6 next Sunday. The midweek review is 6 Wednesday as usual. And day trading programs and beginners programs are available for those who would like to either day trade or boost their trading qualifications. Otherwise, thanks a lot. Enjoy your evening and see you very soon. Thanks very much. Bye for now.